It's the Market Sniper giving you an equity update. We've got a swathe of equities, and I'm here to tell you that a lot of our positions are looking at shorts on a variety of equities. Yes, that's right. We're quite concerned about the state of the market and the world. As you can imagine, we see demand destruction going around. We will touch also on the oil price, but here we are. It's the dawning of a dark night for Black Knight Industries. That's right. This is, wait for it, let's give you Zach's definition of dark night. And actually, this is an analyst we actually agree with. He is bearish at 2. Here's the fundamental reason why it makes the bear of the day for him. Integrated software data and analytics solutions that service, you wait for it, mortgages, home equity loans and lines of credit. Black Knight also provides analytics that show property ownership data, valuation models, and collateral risk scores. So it sounds like quasi home industry, which, as you know, currently facing a record fast rates increase, could be finding estate agents rather squeezed at the moment. In addition, BKI, Black Knight Industries, delivers lead generation, multiple listing services and other servicing data. Well, if people aren't selling and volumes are down, I can tell you they're also spending less on software that gives them leads that ain't working. The other thing is, it's rated as a strong sell by Zacks, which is quite interesting. We're here for the technical reasons. It was quite interesting to actually see a fundamental guy that is backing up what we see technically. In fact, I'm usually expecting the exact corollary and usually quite comfortable with that. I want to be nervous, but they look pretty good and the reasons are pretty strong. Information Services Industry Group, which rank in the bottom third out of more than 250 Zack rated industries. As such, we expect the industry group as a whole to underperform. So those acting in that market, they expect to underperform. That makes sense given what they do over the next 3 to 6 months. I'm going to go stick my head out and go year, quite possibly year and a half. But anyway, let's not disagree on minor details. Candidates in the bottom tiers of industries can often be solid potential short candidates. While individual stocks have the ability to outperform even when included in poor performing industries, the inclusion of a weaker group serves as a headwind for any potential rallies, as the journey forward is that much more difficult. So we're talking about a pretty weak and average to below average performer in a pretty weak industry. Now, that is why they're saying potential shorts. And funny enough, technically we came to the same conclusion. The odds are stacked against Black Knight's industry, and the stock is agreeing with this notion. Despite a drastic move lower, Black Knight stock remains relatively overvalued irrespective of what metric is used. Also, it's recently had two of the past 4 quarters, they've missed earnings. Now that really pisses off the analysts. When you give guidance and you undershoot on guidance, you make them look stupid, and they downrate shares that miss even numbers that they make commitments to. A, it looks like you don't know your own business. B, it makes it look like you're sugarcoating something that is much worse than it is. And in a risk-averse industry, people back out. You don't want to regularly miss earnings, and that's what they've done every second time. So an overall, a deteriorating outlook, and we'll cover the technical outlook. Let's get straight to it. So, Black Knight, there you go. We have the benefit of an inverted HVF running across here with a steep grind line coming harshly across the top. And as we highlight, you have also this larger head and shoulders with that as a right shoulder with lots of selling coming across the tops over here. All leaning on it, you guessed the 54 level, and we see a run below the 30 level. Yes, Black Knight is one of many that we're not enjoying. In fact, community finds have been aplenty, and you are missing some of them. But let's talk about oil. So oil is the lubricant in many instances. It is the lubricant of economic activity, and it regularly illustrates what's moving and what isn't. And if people have stopped buying and the consumer has stopped traveling and stopped going on holiday, well, you start to have problems. So let's go have a look at that WTI. I had many people literally the day after we spoke of Western Texas Intermediate show up, and some 2 or 3 days afterwards on what is essentially a macro call, and say, you were wrong on oil, because, yes, you guessed it, the oil market actually went up. It went up, and it went up because of production cuts. That's right. It went up because of production cuts. So we're going to show you that right now. Here is Western Texas Intermediate. We're going to take you onto the daily time frame and show you that upside gap that occurred when you got that production cut. And here's the key thing that I want everybody to remember. You don't do production cuts when you are solid with demand. Here you go. That was the gap over there. There you can see it. Pop goes the weasel to the upside, production cuts, and we released our video roughly around here, and the market moved almost immediately against us with an upside gap. And this was kind of, well, hang on guys, that is a cartel that is seeing a drop in demand. People do cuts when there's a drop in demand to preserve price power. They want to sell and cooperate and match the amount that, the lower amount that is being demanded, and match the output to maintain pricing power. The initial reaction is it gives it a bump, but hold on, that gap is now being closed quite aggressively. So the call on the oil is far from decided, and actually the current momentum is to the downside. Plus, we mentioned lots of equities trading off and looking a bit sick. It's only Wednesday. It's not a Friday syndrome. The weekly jobbers aren't going home yet. Yes, it's a Wednesday, and lots of things are looking a little flat. There's also the small fact of our uranium call that we've also given you, and the update on that is rather good. That was your entry short up top on the blue line. Nice little fractal there with downside going on. This is uranium royalty, one of our favorites. We've done it over there. There's your head and shoulder that we've spoken of, and that is a sub $1. I could see it going into the 80 cents from here. You could have been short from $2.40 odd, and the neckline is at around $2.29. You're talking about 60% loss in value. Now that is one of the most advanced, but let's go to the 4U's, shall we? Now this is energy fuels, also got something to do with uranium. You can go and have a check them out. Beautiful head and shoulders, grind line smashing, and look at this clustered little, very tightly grindy candle bodies right there, all just above, wait for it, your neckline getting ready to break. I would suggest that there could be some very nice upside had to the downside, that is, of course, on energy fuels, which is another uranium play. Again, 209 as a target. You could indeed be running sub the 2. I'd maybe push it a tiny bit just to get the technical run of, say, a 199 or 197, a bit cheeky, but that gives you roughly a 9 risk reward ratio at the current levels. Depending on where you entered, you may get a small rally and be able to get filled a tiny bit higher up. In fact, this can be dropped a little bit. If you traded it at the open, you would probably be in and around 13 on your risk reward, and that's not with taking the $2 dip. If you took it down to a 199 just to get your $2 dip, you're banging your door on the 14 roughly in terms of energy fuels. So uranium, again, we reassert our bearishness. These are overall consumption of energy, plus we're seeing the downside movement through the opening gap on the announcement of the production cuts on oil. So oil, far from staying levitated above that gap, has since retraced. This points to the elements that are causing that drop in demand doing rather well. Overall, there's actually quite a lot of stocks looking pretty soft. Now we're here to talk about black nights, and that's the main idea and trade, but we're reiterating the energies are looking weak, and we're seeing it across the board. In fact, let's have a wee look at an old friend like ARK. How's ARK doing on the low in the more recent last few days? Well, we'll see in a minute, but we'll take a running pass on Tesla as well, for example. We'll take a running pass through a couple of them, and what you can see is there's quite clear evidence that they are throwing it down with fair amount of reckless abandon, one would say. It's quite likely that you're going to see that level technically exploited. So equities generally as a whole are looking somewhat weak. If I look at Netflix's rally from what was a very, very steep low, you've got to look at it on the bigger time frame. It's quite clear that this particular equity has had a fairly muted response to its throwdown. It's no longer such a friendly environment for companies that are supposedly growth companies that aren't growing and also aren't profitable. So you can see the degree that it has rallied since its top out on those head and shoulders some time ago are certainly not that impressive, especially when I take the log scale off. If you are to fib that, I don't think you've bounced very hard. This would fall into the category of dead cat bounce. You guessed it, insufficient. Peaked out at the 38.2, which is almost perfect, and hanging sub that in the high 20s. So that's a couple of the big fellas that we've looked at. We said we'd go past Tesla. So Tesla we called short and then said take your profits. How's it done since? Let's have a wee look at Tesla. Another equity that is absolutely throwing it down at the moment. And you can see this rollover taking place. It did return to its neckline, which will eventually get drawn by a somewhat slow trading view at the moment. You will see us on the weekly time frame. This is pretty awful from Tesla, by the way. And this is post earnings. I want to highlight how the market received these earnings. Literally stole a half a penny to supposedly beat the actual earnings and deliver a 0.85 on a 0.846 consensus, and actually missed the revenue. So this is not a growth company. You're missing expectations on revenue and you're barely meeting earnings, which are sub $1 on something that is well over, even today, $153. Don't forget, Kathy Wood says she can see Tesla at $2,000. Wow, isn't that interesting? Especially as all the Germans, get their act together with their battery cars. I'm not so sure I can agree with Kathy. But then again, she's quite heavily invested in that space, and she needs to talk big bubble numbers, doesn't she? The return to the neckline is classic after the target being made. You're then grinding, and then spilling. It's rather rude. Doesn't look that great in terms of where I'm standing. Of course, your future artificial meat at Beyond Meat, also far from exciting, rolling over. We've had a look at a couple of other things along the way. We've got MTA over here that'll eventually load. This is Metala. I'm watching that. Royalties, but again, it's in the mining space, so that's one I'm actually interested in. But even still, we can see demand destruction. A target was made, and this could be negative for both even metals, including gold, and possibly even crypto if we have a deep dive. CRISPR, you know them, the gene editing guys. Well, you will have also watched our recent Pfizer YouTube. If you haven't, go give that in terms of what will happen there. Sell off. Look at this overall performance. So overall, we're not that impressed with the general list of equities that we've got watching and going. We're also seeing the energy sell off. This, my friends, tells me we have already been and are in a recession of forms. By the way, let's add it to the indices and you can have a look. This is the SPY rolling over again after again meeting a neckline on a head and shoulders. Those head and shoulders were in existence the first time Hunter started talking, roughly around here, of 22, March 22, in and around here, where we were saying, no, don't go long for the 50% in 6 months. It now seems like 60 or 70% in 5 months. It's getting more aggressive, of course, as the market is lower. It's interesting to see how it's kissed this neckline a couple of times. You could see instances where there are, in fact, possibilities for rising wedges or ascending wedges in formation here that could see quite extensive sell-offs. That's the SPY. What about, you guessed it, the IXIC? Well, that is the NASDAQ, for want of a better phrase, hanging a lot heavier and has not managed to make its neckline. Again, the overall draw that I would come to would be a rising wedge at the moment. So overall, we're pretty unimpressed with equities. We see demand destruction already showing itself in the energy markets. We think oil could go further down to the downside, and that this could get rather rude. You could end up even with a 3 in front of the oil market, and that could indicate a large reduction in activity, particularly Black Knight Industries servicing the property, who is the main thrust of this video, whilst we throw a couple of other equities at you. Now, I'm here to tell you there's a host of other shorts. Some of them are absolutely gorgeous that are truly set up, and many of them were community finds that we deeply dived on and analyzed further and picked out the real gems. You too can become part of our community by clicking the first link in the description below and booking a call so that you can build wealth in reset times, because things are going to go down, and in fact they fall faster and harder than things going up, and that is the possibility and the opportunity available to you. So you've seen in a previous video our update on Pfizer and BAE, where the one is going up and the other's going down, and you've seen a couple of other equities. I've got so many more to show you, but out of respect of everybody else, you may have to wait a fair while for some of those. Don't want to be too late? Book a call. Until next time, watch out for that dark night rolling in for the Black Knight Industries. They're tucked up in the home sector where, you guessed it, the interest rates are starting to bite. Till next time, give us a like, puppy licks, and we'll keep updating you with the world as we see it using HVF method. Until next time, bye for now.